So I think we have around 55 minutes to cover loans. So I'll start the session with a 10-minute presentation to give you an overview about loans. So we'll talk about the kind of loans that they are on the market, what loans normally involve, what you need to consider about loans before applying to them, and also the different steps, processes, and timelines to actually apply to different type of loans. Then we'll have around 25 minutes with Greg from Startup Loans, who will give us a view from the lender. So he will have the time to give us a lot of insights about the process, about what Startup Loans actually do, and how Startup Loans can actually help you to get a loan. And finally, we'll have, I'm going to wrap up the session with some tips and tricks and tell you how Turn can actually help you guys to get a loan and help with the whole process. So during the session, if you have any question, please put it in the chat. My colleague Flani will write that down and we can go through them at the end of the session or during the session. It's really up to you. Otherwise, you can just unmute yourself and speak to the audience. We'll be very happy to answer your question. Then let's start with a loan overview. So basically, a loan is about getting an amount of money that you can use to open your business, for example, or for your business activities, and that you will need to repay at some point in the future, usually with interest. So you pay a fixed amount, which is called the loan ask, and a certain amount of interest on top of the fixed amount. The repayment is usually set every month and need to meet the repayment deadline. And unlike investment, there is no equity or control over your business given up. So you take the control of your business. All you need to do is to take the money, invest in your own company and repay the lender with the interest. Finally, lenders do not usually offer additional support or advice. However, some lenders, such as Startup Loans, will provide additional support and will give, in this specific case, up to 12 months mentoring. But I'm sure Greg will take some time to talk about that a bit later. So now let's talk about the different type of loan that we can have. So we have loan for either personal use or business use. And tonight we will only be covering the business loans. So if you want more information about personal loans, you can easily find a lot of stuff online. So please take the time after the session during this week or during this weekend to make some internet research and search about personal use if you need to. So the lenders will give you a loan according to different criteria. The first one is the stage of the business. So you can have, for example, a microloans up to £500, which is a rather small amount, but can be very useful for setting up a test or creating a basic minimum viable product, for example. There are loans also for businesses, startup businesses, which would cover most of the audience tonight, actually. And the third type of stage of the business would be the growth business loans, which is loans for business looking to grow and scale their operation on the market. So lenders, which are often charity in this case, offer also loans for specific group of people. So there are some eligibility requirement, which is not based on the business itself, but on your personal details and your personal history. So some institutions such as RefuEd or Restart are giving loans to people with the refugee status. Some other institutions provide loans for people having a poor credit history, which usually implies that you get a higher interest rate, which is something that we don't really recommend. And there is also loan for people of certain faith. So for example, there's a type of loan called the Sharia compliant loan. So if you want more detail about this loan, you will be able to find a bunch of information in a link that we will be sending to you after the workshop. Finally, there are loans for specific categories of business, such as local business support networks. For example, the Chamber of Commerce in some areas or your local council. So it's worth checking on the internet if your local area is offering that type of loan. And finally, there is also loans that are granted to business under the specific circumstances, such as COVID-19. But those they have really specific requirements. So you need, again, to check on the internet if you fall under those requirements, and you will be able to ask that type of loan. So basically here, as I said, with a few exceptions, every loan has an interest rate attached to it. So as a rule of thumb, anything less than 6% is rare and great. And we'll take those 6% in this specific example in these slides. So the total interest you will need to pay back increases in two ways. The first one is by the length of time to repay, and the second one is the amount of the sum. So let's take two examples, for example. The first example here, so let's say we have 6% interest rates, and we want to have £9,000 loan to be repaid over 24 months. In that case, you will need to repay £399 per month. If we take only 8,000 and instead of 9,000, so that's 1,000 less, we would need to pay £355 per month, which is a lot less than if we would have taken £9,000. So that means basically that taking out less money means both less to repay and less interest over time. So you can visit this link that my colleague Flanny will put on the chat to use a calculator that will automatically compute how much you will need to pay on a monthly basis based on how much you need and how long you would like to borrow. Thank you, Flanny, for putting the link in the chat. So now, what do we have here? Things to consider before going for a loan. So before you take the big decision of borrowing some money, there's a few things you need to consider, and you need to use this pre-loan checklist that we've made for you, which will be rather simple to understand, I hope. Otherwise, just unmute yourself and ask a question, or ask your question in the chat. So the first step is that we highly recommend that you do a customer testing. So customer testing is very useful to show the lender and yourself that your idea is viable. So according to the result you will have, it will show that your idea and your business is meeting the customer needs and wants. The second point, the second checkbox to tick is that you want to complete a market research. So you know that you can prove and understand your competitors, the problem that you're trying to solve, and how you will reach your customers. The third point is to ask the question, can I start the business without that loan? So basically, can I use bootstrapping as an option? You need to seriously consider whether it's necessary to use that money, because as some people say, with great loans come great responsibility. So when you take a loan, you need to be able to repay the money month after month and make sure that everything is fine. Last but not the least, what is the least amount of money that you need? You need to have a list of everything that you will be able to pay with that loan, and just break down the different costs of your business. So now, how do you choose the loan that you want to go for? So first, you need to know how much you need. So we just talked about that. You need to have a clear breakdown of what you want and what you need for the business, because it's very different. You need to know the stage of your business. So here, different loans are available to pre-launch stage businesses, and other loans are available for post-launch. So you need to know your stage, because the requirement for the loans will be different. For example, some loan provider will require X number of years of registration and trading revenue before you can apply, and other loans provider will turn you away if you have already launched. The third point is about your finance. So how much money you earn currently? What is your credit score? Have you already had a loan before? So you need to be aware of your basic financials, as the lender will, of course, check them. The last one is your preference or specific conditions. So you need, the question here is, do you need a lender with a specific religious background, for example? Do you need a lender with a specific business support? So it's really up to you to understand what is your need and what are the eligibility criteria that you can have in order to choose the right one. All right, so now what do you need to do to complete your loan application? Usually the application progress are very simple and straightforward, and I'm sure that Greg will show us how to do for the starter loans. But I'm going to quickly present an overview of how it goes usually. So the first step is to fill in your personal information and provide supporting documentation, such as your ID, your proof of address, your BRP, and all those basic identity documents. The second step is to submit your business plan to make them excited about your idea and your business. So the business plan will show them why and how your business will work. The third piece of document that you will need to submit is your cash flow forecast. So a cash flow forecast is basically a realistic number of what you expect to spend and earn over the next 12 months. So here, yes, so here the lender will basically see all the documents that you have submitted, and they will review them and come back to you if they have any other question or clarification questions, or they might also do an interview just to have a final feedback about you and your business and clarify any additional question that they might have. before taking a positive or negative decision. So I'm going to quickly summarize what we have talked about. So the interest rate, so below 6%, that's a great interest rate. Between 6 and 10, that's a good one. And over 10 is usually a bad interest rate. You will need to submit a complete application, including the business plan, cash flow forecast, and any other supporting documentation required in the application form. The expected deadline or timeline, I would say, is between 2 and 5 months. I think I'm on the wrong one. Sorry for that. Yes, 2 and 5 months, depending on how long it takes you to prove that your business is good enough to take a loan. So timing is very important. You might be faster to wait to apply until your business is actually ready to take a loan. Loans are usually very competitive. There's no guarantee that you will have a loan. So lenders usually look at loans application every day. So you need to make sure that you are actually sending out your application and submit as much information as possible to them. Then if you don't get the loan, that's okay. It happens. It's not the end of the world. Often you can reapply after a certain amount of time. And it's actually not necessarily a bad thing, because it will mean that you will have more time to work on your business and improve your business profile. In our experience, it's likely that you will get a loan not through a bank, but through a charity or a government-backed lender, such as a startup loan. And Greg will tell us a bit more about that later. So before we hear about Greg, let's see how Turn can support you in your loan journey. So first of all, before I start these slides, I just want to clarify that Turn does not provide any funding directly, but we can support you in different ways. First, we can help you prepare your loan application. Then we can also manage partnership with lenders and make sure that your application meet the requirement. We'll also make sure that your business is represented the best way possible to maximize your chance of success. And we'll also assist with understanding your loans, terms and conditions, and reporting responsibilities. So as I said, Turn does not fund directly. So we don't have any control on the lender's requirements and processes. We don't have any control on the final decision. And finally, we do not manage your loan repayments and reporting responsibilities to you. Now, so far we've covered quite a lot, but it's time to get to the exciting part of the session. So I would like to introduce you to Greg from Startup Loans, which is a subsidiary of the British Business Bank. So Greg's job at Startup Loans is to help new and early stage businesses to access affordable finance and mentoring support. He is a senior business advisor, and that means that Greg is actually a loan specialist expert with over 10 years of experience in the field. So he has supported over 100 businesses, helping them to launch and grow. And I think Greg will give us a lot of insight over the loan process and give us all the information we need to actually have a loan with Startup Loans. So Greg, thank you for being in the room. I'm going to stop sharing my screen and give you the floor.
Thanks, Tim. Yeah, I hope you don't set expectations too high here. It's been so nice, but yeah, hopefully I can go in. Yeah, give you all some insights into the process. So let me know when my screen is sharing. Is the presentation on?
Yes, it is.
Excellent. Right. So let me get a brief sort of introduction into myself and my background. So I've been working in startup for over the last 10 years. So I used to work for the Prince's Trust. I used to work probably more in the way that Turn work as well, where you're working more on the support in the business planning stage and working all that forward and supporting people to get loans. So I always think I'm business support at heart. I've spent all that time sort of mentoring as well. So I still sort of work with the Prince's Trust and mentor and coach businesses. We're in the startup stage, pre-startup stage, early years sort of trading is probably my background experience. That sort of picture of me as well in what I sort of support for fun as well. As a sort of self-employed freelance, I do some sort of consulting. I work with a charity that works with street food pop-ups. So in a similar way to Turn, it sort of works with people who've got a food business idea, want to sort of test it out and build that business. And the goal is obviously to move on towards a full-time food business. So that's sort of like personal passion, something I still enjoy. But yeah, my day job as senior business advisor at British Business Bank Startup Loans is, I sort of make the final decision on the loans that my team sort of work with. So the hub is working directly for the British Business Bank Startup Loans. So we deliver loans and we work for the British Business Bank, whereas Startup Loans has a number of delivery partners as well. So that's organisations, some specialist organisations that either provide specialist support or they work with specialist groups of people. Like, for example, we have organisations like ex-forces that work with ex-military and other areas, but I work directly for Startup Loans. And yeah, it's probably, I'm going to try and speed through as much as possible as I can with my presentation, because I feel like Tim's touched on a lot of the points, things we've sort of mentioned earlier. So I don't want to dwell too much. I want to give yourself time to sort of come and ask me questions really that you might have around the process and around how to get a loan, because ultimately I'm coming to this and our sort of goal at Startup Loans is we're looking to lend to absolutely anybody that a loan is the right thing for them. So that is what we're here to do and what we're trying to do. So success stories. So I won't go into too much detail, but I remember sort of a Turner asking me around, do I have data on refugees we support or other areas? One thing I can say is I've done lots of loans to everybody of every sort of background, experience, business idea, business stage. I can tell you I've definitely supported people from a refugee background. Like, Startup Loans is for everyone if the loan is the right thing for you. So, there's loads of stories and stuff I can share with you. Examples of businesses, even at this time, we're supporting cafes, coffee shops. We've had loads of businesses that have sprung up over lockdown. This is a baking subscription box that I think I've had another one of these myself as well personally that's done really well in the last couple of years. We've had everything from these memorable businesses. There was a bee-themed gift that's a social enterprise that's sort of passionate about bee conservation. Like, absolutely anything. If it's a business idea that's you want to pursue, we give everything the sort of opportunity to go forward. So around Startup Loans, there's a few things which I think Tim has already sort of got around the theme from, and the big thing that we look at as Startup Loan is the timing. So you are asking us for a loan at this moment in time. So I always say to everyone, we're a moment in time lender. You've got to ask yourself the question, is now the right time? One, for you, two, for the business, for you to access a loan. The key thing is apply when you need the funding, and this funding is going to be used immediately, because when you start to take the loan, you will start to take the loan repayment soon as well. So do consider that. Financial circumstances, you're asking for debt finance, so whether you're coming for us or somewhere else, you've got to consider what are your financial circumstances at this moment. So at Startup Loans, we aim to support people who don't have a good credit rating. So the whole circumstances and the whole process is themed around not sort of, not including or giving people the opportunity who may not have a good credit history, because we're aiming to support people who banks wouldn't. But what is going to be pretty key is the last couple of years, or in particular, last 6 months, last 12 months, are you meeting your commitments? That is something that would make it difficult for you to get a loan from us or anywhere else. So that's the thing to consider. Business and progress and the goals that you've got for the business. So, what is the strength of the business? Is it a business where, it's going to be realistic? You expect that it could pay you a wage in the short term if you're going to need to get a wage out of it? Or, is it a business that maybe lots of businesses, although it might be successful, might be difficult for them to, give you a wage in the short term? So it's considering those things and going, right, can the business do that? Backup plan. So a key part of sort of our lending is more themed around, right, what is the risk to you personally? So if you've got a good backup plan that, if this business wasn't successful, you could manage the lending, or, you could keep the business going. That is a key thing that's going to help you. And do always consider alternative finance options, like Tim and like the team have talked about. Is it the right thing right now for you, or at the stage of the business? Because the way that I always think of, when you're taking on debt to a business, you're going to want to see a return investment on that. So until you sort of paid that loan back, you've not got all your money back yet. So it's always considering, is it the right thing for you right now? If it is, we'd like to support you. So I'm only briefly going to go over our eligibility, but anybody got any sort of like questions around it, just pick up with me at the end and you can get loads of information. So Startup Loans, the core product, we do loans from £500 to £25,000. So you can choose the loan term, although we would, depending on your circumstances, suggest you, to manage the loan term on the repayments in the way that Tim showed you with the calculator, making sure that it's something that works for you, both for the business, but your backup plan. It's fixed rate interest, 6% per annum. There's absolutely no fees related to loan applications. So lots of people, choose to borrow it, thinking about that manageable loan repayment. But you've got the flexibility. If things go well, you want to repay the loan early, you would save on interest costs. This is not a commercial loan. This is public funding. It's here to support you. We offer, free mentoring, after you get the loan. So that's an optional thing. You don't have to have it, but it's something that's there available to you. You will get your own business advisor. So when you apply for the loan, once you've submitted your basic documents that Tim talked about, I'm going to talk about a bit more, you will get a business advisor who's then going to help you. And the business advisor's sole goal is to help you get to an approval outcome and support you in that process. So, it is their support is built into applying for the loan. But like Tim said, it will give you a big advantage if you've done some homework yourself. If you're going to be reliant on that business advisor to help you, start the business planning, to start your market research, obviously that's going to slow things down for you. We've got loads of templates, all sorts of things on there. Eligibility. So there's very few criteria really, and mostly I'd say this is open to pretty much anyone for a startup loan. So anybody over 18, you're a UK resident, as long as your business is trading up to 2 years or startup. It says your name to secure finance from other sources. Self-declaration is okay. So most people, struggle for startups to get funding from elsewhere. The business has to be based in the UK. One of the things that could affect you, that does affect people sometimes, is if you've got indefinite leave to remain, that's fine. If you have leave to remain, that can affect the loan term. So I know that's something that people have queried with me before in the past when I did this last year. That's one thing to consider. It could affect the length of the loan term you have. It could alter the repayments. So consider if that's sort of right for you. So I don't think there's anything else I really want to go through massively on eligibility, but I can answer any questions people have got. But the core of Startup Loans is a scheme. It's there to help people set up businesses. So there's some things we can't support. There is some specific restrictions. So, examples would be spending funds on personal things or personal property, or something that could, for example, on doing up a room in the house that could potentially add value to property. They're things that could be an issue. There's some quick ones there. Debt repayments. We don't back pay debts. training qualifications that's essential. So, for example, you want to be a driving instructor, you want us to pay for the qualification. It's not really something we deem appropriate for debt finance. Investment opportunities. So yeah, if it's not really business, but you're looking to invest in something, that doesn't really work for us. And there's some other things that's more around the structure of the business, basically autonomy and control of the business. So for example, we don't fund things like, working as an Amazon driver, because we wouldn't see that as, an independence of business. So I don't want to go over that massively, but just to explain the process to you, I just want to focus on a bit. So there's a credit check done as part of your application. So passing the credit check is around making sure you meet our credit policy, which is very, very low. So for example, you can have default. If you go for a smaller loan, you can have past, CCJs, but it's more about, right, what has happened in the last 3 years? In particular, what's your last 6 months, 12 months? Are you keeping up to your repayments? Are you managing your commitments? And it's not a high bar at all. So one thing, we have had some, people worked with partnership in that have failed the credit check in the past, and that's related to, financial difficulties they've had in the current recent period. So when we're talking about at the start about timing is, consider those things, not just if you apply for us, but you apply anywhere, because if you fail our credit check, you're very likely you're going to get a loan from elsewhere. So, it's not really a high bar, and I wouldn't want you to be put off from it. So you do have any queries and stuff, and once one that you want to feed through, your turn support, your mentors, happy to do that. Don't be put off. Ultimately, if you're keeping up to date with things or you've caught things back up on track, you shouldn't be too worried about a credit check. So there's 3 simple criteria. Eligibility, like I briefly talked about, so I'm not going to talk about that anymore. Affordability, so this is not sort of unique to us. This is just part of responsible lending. So anybody who lends you money has to ask you about your personal circumstances. They have to do what's called the affordability assessment. So in our case, it's a personal survival budget, and we could ask you for 3 months bank statements. That's probably a standard. If your credit rating is not super high, most organizations will probably ask you for 3 months bank statements, because of what they want to see, that what your personal budget is, that you are managing your commitments as you say you're doing. So just be aware of that. And like I say, it's not something that's unique to us. That is what, if anybody's lending you money, particularly as a personal loan, which is what a startup loan is, they have to do that, or they're not running things legitimately. So if somebody doesn't ask you about that and wants to lend you money, I'd probably be concerned whether they're operating correctly. Viability. So viability, like Tim talks about, we're going to talk about 12-month cash flow forecast. So for us, it's a very low bar of viability. It's more based on, have you done the necessary research, due diligence? Do you have a reasonable chance of success with this business? So no business is a guarantee. We have quite an appetite to help support you if you have, at least done the research, due diligence on the business. The harder and higher the risk of the business is, then the more, it's probably important to have sort of strong affordability, be in a good solid position, so that, we can feel comfortable that you're not getting in over your head. Cool. So there's three documents. So these are the documents that you have to provide as part of your application, but it's probably good for you in terms of anybody who's you sort of asking for money is probably going to want to know these things. So business plan, it's self-explanatory, but we look at a business plan, in sort of quite a good way, and you get support from the business advisor as well, where it's not about having the greatest business plan. It's about genuinely, do you know enough about what you're doing? Do you have the operational plan in place? Do you have the necessary experience to set up the business? If you can demonstrate that for your business advisor, but you don't necessarily have the most amazing business plan or most in-depth business plan, that will be fine. We go on a basis of sort of trust on that side. But if you're not sort of very experienced in there, if you've not done that much research, then it's probably going to be quite important, more important for you to have a good business plan to back up that, or to show that you've done your research. Personal survival budget, like I said, you could also be asked for 3 months personal bank statements, and that's around, there will be an assessment which is based on what's your current circumstance and what's your backup plan. So like Tim was talking about, you're going to ask for a loan, and there's going to be a repayment amount. There's going to be a monthly repayment amount fixed to that. So one of the assessments going to be there is the level of risk that you're taking as this as a personal loan. So if this business didn't work out, how difficult would it be for you to manage that loan repayment from your backup plan? So the weaker position you're in, the more important it is that the business is very strong, because you'll be taking on a risk. And our consideration is not that we don't want to lend to you, it's more how much will we allow you to take that risk, dependent on, you know, your circumstances, particularly if you've had financial difficulty now or in the past. That's something that we've got to consider, just in the case of, are we being responsible loaning you this money in this current circumstance? So just being transparent with you on that. Cash flow, so we talked about cash flow. It's a 12-month cash flow plan for your business, because you know what that cash flow will show. Most businesses, I would say, eventually will be profitable, but the biggest risk with any business is it'll run out of capital, it'll run out of cash in its first 12 months. It won't have enough money to keep it going. So that's why the 12-month, you know, cash flow is about making sure that you've realistically forecast your business. You have enough capital to make this work. Right, so business plan. A couple of quick points. So always suggest, including the other presentation, but whatever you're applying for, this is for startup loans, but anything you're applying for, whether you're going for a grant, whether you're going for anything, one of the biggest things that's going to give you credibility, asking for the specific amount you need, giving a clear breakdown, showing your research. I always suggest to people like a shopping list that tells you exactly how you're going to spend it and justifying the loan. So it's particularly relevant for a startup loan, but for anybody. If you're asking for any funding, if you're asking a friend for funding, if you're asking a parent for your funding, the minimum they would expect is knowing, well, what are you going to use it for? So, you know, it's a big thing to make sure that you've got that included in your application. Demonstrate you've got necessary skills and experience for the business. So if you have lots of skills experience from employment or elsewhere, or, you know, qualifications, that's self-explanatory. If your experience is more first-hand, more research, more other side, it's probably more important that you detail and back that up. But if you have the experience, we're not really going to doubt it. No one's really going to doubt your experience if you just, that's what you already have through employment, through self-employment elsewhere, doing something else that's clearly got transferable skills for a business. Clearly explain your business knowledge. So yeah, one of the things is understanding of the market opportunity. So depending on your business, it's probably more important. So, you know, if you were a trade, then you wouldn't necessarily really have to explain the market demand, because I'd say that's quite self-explanatory. You're probably talking more about your geography and what you're doing, who you're working with. Whereas if you've got something that's more new, higher sort of business idea, not something that's straightforward to understand, is that something that's going to have demand for it? It's probably more important for you to explain that outline of your operational plan, and making sure you've got things like regulations, licenses, other things. So be clear and concise. So people who review business plans, and I can tell you I've read absolutely thousands, and the time and stuff people have got to look through this, or when you've seen a lot of other business plans, you know, the sort of, you know, stuff that's not important, you sort of breeze through. You know, you're not going to take a huge amount of detail on that. So the most important thing is, you know, you're writing this for your audience. Always remember that. So be straight to the point. Try and keep factual and stuff where possible. Don't try and sort of, you know, over talk something. In a sense, just explain simply where you're at and what you want to do. Personal survival budget. So this is detail of your current personal income and expenditure outside the business. So it's something that's a useful exercise, even if you're not going for loan funding, with all the startups that I work from, which is understanding what wage does this business need to pay you, which is pretty important, because you're going to need to understand that, particularly if you've not got an outside source of income. So that's going to be used both in terms of the business and the cash flow plan. So if you need a certain wage out of the business, is the business going to be capable of paying you that? Also, it's going to be considering in terms of backup plans. So if your backup plans return to employment, return to some other form of income that's not this business, it's understanding, could you manage the loan repayments on there? So just make sure to be, you know, honest and reasonable. Yeah, you might cut back in terms of for the business, but what we're going to assess is the loan term that you're applying for. So if you're applying for 5 years, if you're going to put a budget, it's like, yeah, look, I'm going to survive on the bare minimum for the business for a year, but you've got to make sure the budget's realistic to be for the 5 years of the loan term. So, for example, you're probably going to need a little bit of, entertainment expenditure. You're probably going to need a little bit for extras outside of your main core bills. Just be reasonable and realistic about that. Make sure to include all of your monthly commitments like direct debits and stuff that you're not going to make sure that's in your budget, because the more credible it is, the more things that you've included, the less likely it's going to be queried. Whereas if you put a budget that's literally just your rent and nothing else, then that's where it's going to be queried, because it's going to seem unusual for your personal circumstances. Cash flow, so just a couple of quick points. How a cash flow is going to be assessed. So looking at your cash flow to see, is the business sustainable? So one of the big sort of signposts for that is, does it go into a negative position? So red numbers on a cash flow is not good. So the cash flow should always be in balance, because if you run out of money, the business is finished. So always make sure you're factoring that in and you're planning in the business appropriately. Should show that you've researched your business effectively and understand how your business works as cash flow. Like, for example, I've supported loads for a recruitment business, and a recruitment business will likely expect income at least 30, sometimes 60 days after they've paid the costs out, after they've billed someone. That's a normal turnaround for that. Or like, we've supported a few estate agents recently. You're not going to, most estate agents are paid after the house is closed. So for example, you make some sales of some houses in your first month of your business as an estate agent, you might not get paid till the earliest 3 months after that. So have you factored that into your planning? And knowing that, or factoring that into your planning, or factoring seasonality, one thing I always suggest is never have a flat cash flow, which means all amounts and all income the same, because that suggests you've not done a lot of research on the business, or it doesn't really tell us, is there a plan for growth? Is there a realistic plan that the business might start slower? So it's factoring all those sorts of things within the plan. And a cash flow tells us around, how much is your ambition? What is this business? Is it something that you're hoping is a side income, as a hobby, or is this a business that you're hoping is going to employ people, going to grow, going to maybe take more lending later? That's something to build into your plan that tells that story. And I think one thing I'd say is make sure you sort of showing your workings out, because it's not about, right, you've got some numbers in there, but I don't know how you've compiled those or what your business is based on as someone that's reviewing it. So it's you adding in that detail to show why you've got to those numbers, because that's what gives them credibility. But to be honest, nothing ever turns out how you plan it, but that's probably how it's being reviewed. Is going, how have you put this together? Is that reasonable? If it's reasonable, it shows some research, we're going to give you more credibility for your cash flow. Make sure you add in some contingency, so don't just put absolutely zero cost. If you're adding in some just bits of extras, like one top tip would be, make sure you put a reasonable budget for marketing, especially if you're a startup business. You expect to go from £100 a month sales to £5,000 or £10,000. I probably expect a couple £100 a month in marketing. It's being reasonable about that. Whereas if you put £10 a month for marketing, I'm going to do social media and I'm an online shop, then I'd say to you that that's probably unlikely to happen. So just make sure you factor in those things, and it's going to give more credibility. And the biggest tip, always make sure that you're tailoring the plan to the loan application. So for example, if you're also seeking investment, don't put your investment cash flow plan and your business plan for investment. If you're seeking £150,000 for investment, don't give us that same plan for a startup loan, because it's a totally different amount of funding, different sort of scenario you're going to have for your business model. So just tailor the loan application to this. Don't just stick in another business plan or a pitch deck for this loan application, because that's going to tell me, one, you're shopping around, two, I'm not going to know whether the loan's going to be appropriate for you. So top tips. So
this is just to let you know that we have 8 minutes left.
8 minutes. So I'm going to squeeze through this very quickly.
Thank you, Greg.
So apply at the right time, talked about that a lot. making sure you're considering your circumstances as you apply, tailor your application so don't be speculative. So one of the things you see the most is going for £25,000 when you do not need £25,000 at this moment. Accept support of your business advisor. It's going to be more difficult if you don't see them as a support. They're not going to be able to help you through the process. Be in as secure a financial position as you can. It's going to give you the strongest chance to get the loan. I know that's easier said than done. Have a realistic financial plan. Be flexible about how you build your business. So one of the things we were talking about here was bootstrapping, other things. So, you know, consider maybe we may not be comfortable with £25,000, but can the business still start on a smaller amount? Or one of the options that we do is called tranching the loan, which means you can apply for, you know, more than one startup loan. You can apply for what you need now. You can apply for more funding later. This helps manage the risks going for that. Right, sped through. We still got some time left for questions. So
Thank you so much,
Anybody
Greg. I
sent
think,
any in yet? No
Yogi has a question.
Yeah.
problem.
Hi, Greg. Yeah. I like to start a business here. I get a loan and I want to.
Yeah.
At the moment, I'm in the universal credit, but enough money for my family.
Yeah.
And I work part-time in British Museum.
Yeah.
Part-time museum on the as a chef here. And I have few more credit card here.
Yeah.
But the credit card is no any problem because the reason I got credit card, I want to improve. I want to improve my credit score. That's why I bought credit card. And the credit card, on time I'm paying everything. Yeah, on time paying. So normally I use for the credit card for month. Then after when I get the money, my credit and wages come straight away. I pay for that. Yeah. At the moment, that's good. This when I use the credit card, is anything any effect for the when I apply for the loan?
So we expect people to have existing credit commitments. So it's not a problem to have a credit card. The one thing that's going to be factored in is in terms of your personal budget. So what's your commitment? So rather than being like, oh, do you have access to a credit card? It's more going to be if you had a running balance on that, what those repayments are, that's going to be factored into, you know, the backup plan, your personal survival budget. But it's not a problem. Like the vast majority of everybody has credit commitments. Normally what's surprising when I don't see people have credit cards and I don't see people have credit commitments is more unusual, I would say. So I won't worry about it. If you're keeping up with repayments, it should never be a problem to us because our threshold is very, very high. Like you said about your circumstance, we lend to a lot of people who are on universal credit. The one thing that we, you know, it's not as simple as going, right, I've got universal credit, for example, and I could manage the loan out of universal credit. We'd probably want a more robust backup plan, you know, in sense of, you know, returning to employment or other things as well, because most of the time universal credit doesn't leave you a lot of, you know, extra money, does it? Exactly. To manage, say, for example, you went for £25,000, it's £500 a month loan repayment. That would be quite challenging on universal credit. But I can't remember the statistic, but I'm sure it's like, you know, probably 30 to 40% of the customers that go for a startup loan are either unemployed or have universal credit. And I do loans every day to people on universal credit. So it's more about, is your backup plan still plausible? Are you managing your commitments? Absolutely not a problem for us at all. So I wouldn't be worried about the credit for appliers.
It's not any problem for that, yeah?
Yeah, universal credit, a lot of the businesses we support, because you normally keep universal credit, you know, it only reduces on your income threshold, doesn't it? So I would say even people who weren't on, you know, unemployed when they start the business, lots of people who apply for a startup loan actually have just maybe started the business and they've moved on to universal credit because their business, they're not going to expect it to get a wage in the short term. They're eligible for universal credit. So they've moved on to it. So it's definitely not something, and we'd look at that of going, right, that's probably going to give you some income, isn't it? While the business is getting started, it's only going to be reduced when, you know, the business does well, basically, isn't it? When you start earning a lot of money. So yeah, it's not, definitely don't, like I said, lots of people we lend to have universal credit, have an element of universal credit that's still continuing. It won't affect, yeah, the way we consider it. Like I'm saying, we still look at your personal budget, your circumstances, your affordability the same. Does that answer your question?
Hi, Greg. I just have a quick question. My annual salary is around 22,500.
Yeah.
So I have no default. My credit repayment is on time. Everything is on time. Still, I got refused from two lenders. I don't know what is the reason. I'm really confused how to find out this.
Yes, so it depends. Who did you go to? Did you go to
Mercedes-Benz. Mercedes-Benz.
Mercedes-Benz? Yes, so it's always on. It depends on what your repayment is for. So when you're going to a commercial lender, all they are thinking about is, are they going to make money off of you? You know, what are the risks to you? So if you're on, you know, like I speak to, and this is someone who doesn't earn a huge amount of money as well, 22,000 to them, say you're going for like a lease hire car that's £500 a month, I don't know. But they will probably look at your existing commitments. They would have a simple risk threshold based on what your income is. Computer says yes or no based on what your circumstances are. And they are quite harsh. So yeah, but it's not really something we sort of consider, but do consider who you're going to, what your commitments are, what your backup plan is, because most lenders will look at, and depending on what you already have as a credit commitment, how comfortable they are lending to you. And one of the biggest things that will come into play for most people is there's people who have a lot of credit, but say, for example, they've got 20 years of always making their payments.
Yeah.
They have a mortgage, they have other things. Those can almost get whatever they want, because whatever they seem to borrow, they will pay back. If they've got a mortgage as well and assets, it's something that lenders are just comfortable lending to those. Whereas the less you have, the more difficult it is, because even if you keep up to your repayments when you haven't had much, they just see you as a risk. So what I would say is, don't take it personally. You know, don't see it as that, because they're in a money-making business and they're in a risk business. So, you know, most organizations, you know, there are organizations that will lend to you, they'll just charge you more money. Doing it. So different ones have different risk profiles. Particularly, unfortunately, at the moment, I would be conscious of lots of organizations will have a lower risk threshold. So that will definitely apply to like high street banks as well, where, you know, with us, for example,
even the Halifax Bank, they refuse it. I'm since 5 years with the Halifax Bank. They know about my everything. They refuse as well. I have heard they say some people say to me it's about your changing address. Is that true?
Changing address can cause issues, because with your credit thing, there's two things they're looking at. You know, your credit profile gives, or, you know, it's not just credit profile, there's loads of checks now lenders will do, and what they're looking at your past financial history, but they're also looking how easy would you be to pursue for the lending. So moving a lot, not having a fixed address, or likely to be findable. So that is something that can impact you, and I know it does affect some people here as well, with refugees and other areas. So do be conscious of maybe timing. The other thing as well for all you to be conscious of, lots of checks in a short space of time can cause you issues, even if you have a good credit rating.
Yes, so I have excellent. I had excellent when the lender refused. Now it's good.
So that's like, I'm no expert as well, but, you know, obviously I work within this area. But if you moved a number of times within 6 months, if you've had a number of searches, or you tried to get lending, whether you've been rejected or not, you've just had searches on you. Those things on their own can, even if everything else is great, it can lead to somebody not lending to you. Like, I've recently taken a mortgage in the last couple of years. So if I went a couple of months after I've just moved address, I've just taken on a mortgage, tried to get other credit, even though I've had a good credit history, even though I've got a mortgage, equity, it wouldn't matter. Most lenders would be cautious in lending to me, because after 3 months, after 6 months, after you've been at address, after you're keeping up with your commitments, likelihood is you'll be fine. But do be conscious. You know, we talked about timing and stuff as well. Do be conscious of those things, their timing, or, you know, sometimes when you do that, and then, you know, if like in your scenario, you went to one and you went to another, and you're getting those checks as well in short space of time, rejections, just be careful about that, and
Thank you so
for any that have not already, do check your personal credit. So anybody can check their personal credit. You can sign up and do the free trials, or you can request.
I do check,
Right.
yeah, you check, I paid.
I have
a question.
Yeah. Check those things. So if you're thinking, are you worried at all that you've moved address, or you've had things, you've had any missed payments or something, I definitely suggest having a check of it all, especially if
Doesn't
you
show
have
anything in my credit score. Doesn't show anything. Just I changed my surname. That would affect as well. I don't know.
changing your name as well. So
Surname, only surname.
one of either name. So anything changing in your name can change it, change your address, other things. So just one of the key things is most applications, Startblend, for example, we will say, you know, put your name, and it will normally always ask you, have you got any other names, aliases, or other things? So make sure if you have changed it, even this comes with married names as well, or you know, we've had people who've had issues who've maybe got divorced and they've changed the fact, or they've not changed the fact, or they've, do you know what I mean? They've gone through that as well. It can cause issues with your credit checks and searches.
Yeah.
One of the things is, you know, that you'll be checking is you know, proof of identity and other things and stuff as well. So yeah, just make sure you're always honest with your information, because that's what can cause issues, or you can get lots more queries. So, you know, you, for example, said you might have changed your name, but if you didn't tell an organization you've changed your name, and you know, that's something that they may then follow up with, ask for more documents, because they're trying to investigate, you know, why you might pop up with different profiles or anything. So do.
Thank you, Greg.
Thank you so much.
No problem.
I think we are running out of time.